If you had put $1,000 in a Bitcoin in January 2023, you'd be sitting on over $6,800 right now. But if you'd done what most beginners do, panic bought at the top, panic sold at the bottom, you'd have lost nearly half that money. Same asset, completely different outcome. That gap? That's not luck. That's knowledge. And the 5 things I'm about to tell you are exactly what separates those two outcomes. I learned most of these the hard way. Here's why this matters right now. We are sitting at one of the most unusual entry points in crypto history. Bitcoin just completed its 4th halving cycle in April 2024. Historically, and I mean every single time this has happened, the 12 to 18 months following a halving have produced the largest gains in Bitcoin's existence. We're inside that window right now. At the same time, institutional money is flooding in. BlackRock's Bitcoin ETF crossed $20 billion in assets under management faster than any ETF in history. That's pension funds. That's endowments. That's old money finally showing up to a party that retail investors have been at for years. If you're sitting on the sidelines, still trying to figure it out, the cost of waiting is going up every single day. Lesson 1. You don't need to understand crypto to invest in it. You need to understand risk. Most beginners spend months trying to understand blockchain technology before they invest a single dollar. That's like refusing to drive a car until you can rebuild the engine. You don't need to know how proof-of-stake consensus mechanisms work. You need to know how much of your portfolio you can afford to lose completely and still sleep at night. The rule most credible financial advisors are landing on in 2026: no more than 5% of your investable assets in crypto. If you have $20,000 invested, that's $1,000 in crypto. If that goes to zero, painful but recoverable. If it 5x's, life-changing on the upside without betting the house. Start there. Seriously. Lesson 2. Bitcoin and Ethereum first. Everything else is a lottery ticket. There are over 10,000 cryptocurrencies listed right now. 10,000. And here's what nobody tells beginners. The vast majority of them will go to zero. Not might. Will. You remember Luna? The coin that wiped out $40 billion in value in 72 hours in 2022? People lost their life savings. Not because they were stupid, because they chased a 20% yield without understanding what was underneath it. Bitcoin has been declared dead 473 times. It's still here. Ethereum processes billions of dollars in transactions daily. These two aren't going anywhere. For a beginner in 2026, 70% Bitcoin, 30% Ethereum. That's it. Build from there once you actually understand what you're doing. Lesson 3. Dollar cost averaging will make you more money than any prediction ever will. Here's the thing. Nobody, and I mean nobody, can consistently time the crypto market. Not the analysts, not the influencers, not the hedge funds. But you don't need to time it. Dollar cost averaging, investing a fixed amount on a fixed schedule regardless of price, removes emotion from the equation completely. If you'd invested just $100 every single month into Bitcoin from January 2020 through December 2023, through the crashes, through the FTX collapse, through all of it, your $4,800 total investment would have grown to over $13,000 without timing a single trade. This is where Webull actually becomes useful. You can set up automatic recurring crypto purchases, Bitcoin, Ethereum, on whatever schedule fits your budget. Set it, forget it, and let compounding do the work. Links in the description, and right now, they're giving away free stocks just for signing up. Lesson 4. The wallet you ignore is the risk you don't see. When FTX collapsed in November 2022, over $8 billion in customer funds vanished overnight. People who kept crypto on the exchange lost everything. People who held their own keys didn't lose a single coin. Not your keys, not your coins. This isn't paranoia. It's basic security hygiene. A Ledger hardware wallet costs around $79. That's the price of 2 dinners out to protect potentially life-changing money. If you're holding more than $500 in crypto, get your assets off the exchange. Full stop. Lesson 5. Tax ignorance is the most expensive mistake beginners make. In the United States, every single crypto trade is a taxable event. Swapping Bitcoin for Ethereum? Taxable. Buying an NFT with Ethereum? Taxable. Selling for a loss? Actually useful. You can harvest that loss to offset gains. Most beginners find this out in April. Don't be most beginners. Use a crypto tax tool from day one. Keep records of every transaction. And if you're serious about building wealth here, actually understand the financial mechanics underneath it. That's actually why I've been recommending Audible lately. Books like The Bitcoin Standard or Digital Gold will give you more genuine insight in 8 hours than 6 months of YouTube rabbit holes. First book is free with the link in the description. Here's the truth nobody says out loud. Crypto is the only asset class where a regular person with $50 a month can access the same investment as a billion-dollar hedge fund. But that access cuts both ways. The same volatility that creates generational wealth destroys unprepared portfolios in weeks. The only difference, is whether you understand what you're doing before you put money in. 5% of your portfolio. Bitcoin and Ethereum first. Dollar cost average every month. Get a hardware wallet. Track your taxes from day one. That's it. That's the whole playbook. 5 things I genuinely wish someone had handed me before I made every single mistake on this list. Now here's the question I want to leave you with, and this one actually keeps me up at night. If institutional money only just started flowing into crypto in 2024, where exactly are we on this adoption curve? And what does that mean for the person who starts today versus the person who waits another year? That answer? It's the subject of the next video. If this actually helped you, you know what to do. And check the description for the Webull and Audible links before you leave.